All right, good afternoon then, folks. We head into US trade on Tuesday, the 3rd of October. We'll have a flick across the headlines, we'll jump across to some markets, and we'll see what is going on as the longer term trends have kicked back in, certainly in terms of the dollar. Stocks under a bit of pressure in today's European session so far. You can see stocks slip as surging US bond yields fuel investor angst, and that's just the trend continuing. Trends in yields have been higher for a long time. Really since 2020, they've been trending higher. Obviously, barring a few dips here and there. Stocks under a little bit of pressure off the back of higher yields, and which is then driven the US dollar higher as well. So long-term trends continuing. We will have a look at that once we get around to it. And really, there's not a great deal for us to talk about other than that. We did have the RBA out overnight, sticking to the script of further tightening may be needed, but for meetings in a row with no interest rate hike. They did note economic data suggests that inflation is slowing as expected. Inflation slowing as expected. Haven't hiked in 4 meetings. You have to imagine that they are done. But we have said that for a while, barring any, obviously, majority of these central banks now done, but obviously barring any spike higher inflation, which obviously with higher oil prices where they are at, is definitely still a possibility. Apart from that, we jump across to the grid and have a look. You can see that relayed in the charts. The Australian dollar is lower across the board, not helped at all by equity futures being lower. You can see US equities lower, European equities lower, Asia Pacific equities lower, all a contributing factor to the Australian dollar downside, plus a central bank that is concluded or has concluded their interest rate hiking cycle. That is then bad news for the respective currency. US dollar higher across the board in line with bond yields, slightly higher, kind of flat on the shorter end, but the longer end is substantially a decent chunk higher. But yeah, that's driven US dollar strength. So equity weakness, bond yield strength in the US dollar obviously is a good recipe for some strength into the US dollar. Japanese yen higher off the back of a bit of a safe haven play. So not normally with yields higher, you'd expect the Japanese yen to be lower, but obviously it is a bit of a safe haven play when stocks are off. Certainly the Nasdaq nearly off a full percent. Over to some charts, and you can see equities certainly over the last couple of hours have accelerated to the downside. The S&P is through its support level, certainly making an attempt at breaking through its support level. The DAX, the Euro stocks, making an attempt through their lows. The Dow Jones look primed for a test of this low down at 33,200. These lows on the Nasdaq look up for being tested, should I say, and the Russell, certainly yesterday, Russell got absolutely smoked. But a little bit of a flag for the technical analysts out there. That would have been a nice trade. Somebody had managed to get long or get short off the back of that. Strong, aggressive move lower. Stocks bearish. Nice bit of a continuation path into the downside, but gone a bit off topic here. The VIX pushing higher, as I said many times before, a bit of a fear gauge for the S&P 500. So that pushing higher, stock indexes lower across the board. You can see the US dollar then lower across the board or higher across the board. Your Aussie, Kiwi, Euro, and Sterling lower across the four of them. Across the dollar pairs, you got dollar Swiss, dollar CAD, dollar yen, all pushing higher. Dollar yen somewhat understandably reluctant to have the same sort of gains or extend the move in the same way that the rest of these currency pairs are. We are approaching that 150, and it is getting to that point in time where the Bank of Japan may look at intervening. So dollar yen's something definitely to keep our eyes on in the next in the next few days, next few weeks. If that dollar bull trend continues to push higher, do they step in and do they sell dollar yen, sell a bunch of dollars, buy a bunch of yen, and intervene in order to prop up the price of their currency? Obviously, that remains to be seen, and we'll keep our eyes on it with great interest. I can see yields extending their gains. Certainly the longer end, as I said, the 10-year yield continuing to push higher, negative for stocks, positive for the dollar. That is the way that markets are moving at the moment. Gold's been slaughtered the last while, continues its move lower, certainly lower in the overnight sessions, kind of flat on the day or just below flat on the day. But the more yields continue to push higher, the worse it gets for gold. So these trends look like they do want to continue. This sort of level that I was had my eyes on oil, to retest these highs back here, kind of in this kind of region that we've got we've got over here. It's a decent level maybe to pick up for some oil longs if that does continue to the upside, or if you're hoping that that does continue to the upside. Shorter term time frames, it has shifted a bit towards the upside. You can see it's now starting to make higher lows and higher highs on the lower time frame, moving a bit away from that support level. It's not a bad price to buy some dips on oil if you are a believer in that trend continuing. Whether it continues or not is the question, but I mean, trend is your friend. The overall bias is still higher. You've got to back that horse, even if that moves a bit overdone. But a bit of a dip may be worth having a look at. But US dollars higher, stocks lower as we begin the US trading session. Job openings, main focus of attention in the US session, can be a good front runner for the unemployment rate. More job openings, more people can get jobs. Less job openings, less people can get jobs. So we'll keep our eyes on that as we head towards NFP a little bit later on in the week. In terms of the overnights, you got the RB and Z out. They're likely to mention the raft of economic data over the last month or two that has been positive from New Zealand, likely to keep the door open to further interest rate hikes. You have to imagine they aren't as dovish as the RBA from last night, but 2 a.m. not sure many people trading the London session will be up and active, ready for that. But by all means, if you look to try and trade it, best of luck. But the trends continue. Dollar higher, stocks lower, yields higher. Not so sure I'd want to step in front of any of those trends.